Would you like to know which cryptocurrencies have the potential to 100 to 1,000 times your money, turning $1,000 into 100,000 if not $1 million? In this video, I'm going to reveal the top 5 crypto coins to buy right now for October. These projects range from AAA projects that are currently on good dips to sleeping giants that no one on YouTube has spoken about yet. If you're looking for the best crypto coins to buy into before we get a Q4 bull run, then be sure to watch this video until the end. Also, just before we go any further, this channel has a daily giveaway of 1 million Shiba tokens. To enter, all you have to do is be subscribed to this channel, like this video, and comment hashtag Shiba Inu. Good luck. Before we get to the tokens, it's important that I go over some key information. First off, this content is not financial advice. You must do your own research and make your own investment decisions. Use proper risk management and be educated on what you're buying into if you choose to invest. And we like to do the tokens in order of market cap, so the first token will be the largest market cap, and the last token in the video will be the lowest market cap. This means that most of the time, the token spoken about at the end of the video carries the highest upside potential, but also carries the highest risk. So make sure you watch until the end to see the highest potential token. Number 1, Aster, currently priced at $1.96 with a market cap of $3.2 billion. What is Aster? Aster is a next-generation decentralized exchange that lets you trade cryptocurrency derivatives while keeping full control of your funds. Unlike traditional exchanges that hold your money, Aster runs on blockchain technology, so you trade directly from your own wallet. The platform specializes in perpetual contracts, essentially betting on price movements without owning the actual asset. If you think Bitcoin will go up, you open a long position. If you think it'll drop, you short it. The key advantage is leverage. You can control much larger positions than your actual investment. What makes Aster unique are 2 groundbreaking features. First, hidden orders that stay completely invisible to other traders until they execute, solving the problem where big orders move prices against you. Second, you can trade US stocks like Apple and Tesla with up to 100 times leverage, but everything settles in crypto. No traditional brokers needed. The platform works across multiple blockchains simultaneously and currently processes $184 billion in trading volume across 25 markets, showing real traders are already using it for serious size. Why invest in Aster? To understand Aster's potential, look at Hyperliquid's success story. Hyperliquid pioneered decentralized perpetual futures and achieved a $12 billion market cap, making it the most valuable airdrop token in crypto history. The HYPE token trades around $45 with over $700 million daily volume. Aster is following this proven playbook, but with key advantages. It's backed by YZI Labs, connected to Binance's founders, providing access to proven exchange-building expertise and one of crypto's largest ecosystems. The team can also learn from Hyperliquid's successes and mistakes while adding unique features like hidden orders and crypto-settled stock trading. The token already gained 11x during its initial rally and trades on major exchanges with $1.8 billion daily volume, showing the market recognizes its potential. With derivatives trading measured in trillions globally, even capturing a small market share could justify massive valuations. What are the potential profits? Based on Hyperliquid's $12 billion success, Aster presents significant upside potential from its current $1.97 price point. Conservative scenario: if Aster reaches 10% of Hyperliquid's market cap, that represents roughly 5 to 10x returns. Moderate scenario: capturing 25% of Hyperliquid's success could mean 10 to 15 times potential. Optimistic scenario: competing directly with Hyperliquid could deliver 20 to 25 times upside. Using a moderate 10x target as our baseline calculation, this would bring Aster's price to approximately $19.70 per token. Using the crypto profit calculator, this means you could make around $4,550 in profit from just a $100 investment if the project were to hit this 10 times price target we set. Now, interestingly, on BITUNIX, Aster is available to trade with leverage, and if you were to take a $500 long on 5x leverage, this would take your profits from $4,500 of profit all the way to $22,600 in profit. But remember that leverage trading includes risks. If you want to trade Aster or any other cryptocurrency on leverage, then I recommend signing up to BITUNIX through the link in the description for free bonuses. Number 2. Plasma, currently priced at $1.41 with a market cap of $2.7 billion. What is Plasma? Plasma is a specialized blockchain built exclusively for one purpose: making stablecoins work like actual money should. While other blockchains like Ethereum try to do everything, Plasma laser focuses on solving the problems that make stablecoins expensive and slow to use. Think of it this way: if you want to send $100 in USDC today on Ethereum, you might pay $20 to $50 in transaction fees and wait several minutes for confirmation. Plasma solves this by creating a blockchain where stablecoin transfers happen in under 1 second and cost almost nothing. The platform uses something called Plasma BFT Consensus, which is specifically designed for stablecoin operations. This allows the network to process over 1,000 transactions per second with institutional-grade security. It's also fully compatible with Ethereum applications, so existing DeFi protocols can easily integrate. What makes Plasma particularly innovative is its native Bitcoin bridge, allowing direct connection between Bitcoin and stablecoins without complex wrapping mechanisms. The platform launched its mainnet beta on September 25, 2025. Immediately capturing $3 billion in total value locked within 24 hours. Plasma has also launched Plasma One, the first neobank built entirely around stablecoins, showing how the technology can power real-world financial applications for saving, spending, and earning in digital dollars. Why invest in Plasma? The investment case for Plasma centers on capturing value from the massive stablecoin market expansion. The stablecoin market has grown to over $170 billion and is projected to reach $1 trillion within the next decade. Plasma is positioned to become the infrastructure layer powering this growth. The backing is exceptional. Major institutional investors include Founders Fund, which is Peter Thiel's firm, Framework, Flow Traders, DRW, BITUNIX, and Tether. This isn't just money, it's strategic partnerships with the biggest players in both traditional finance and crypto. Having Tether as a direct partner is particularly powerful since USDT is the world's largest stablecoin. The market timing is perfect. Current stablecoin infrastructure is broken. High fees, slow speeds, and poor user experience limit adoption. Meanwhile, global demand for digital dollars is exploding, especially in emerging markets where traditional banking fails billions of people. Plasma's early performance validates the opportunity. The token launched at around $1.33 and immediately generated over $5.6 billion in daily trading volume. The most active pair, XPL and Tether on Binance alone, trades over $1.2 billion daily, showing serious institutional interest. The competitive advantage is significant. While other blockchains compete in general smart contracts, Plasma pioneered the dedicated stablecoin infrastructure category. This first-mover advantage is crucial for establishing network effects, and the purpose-built architecture creates a technical moat that general-purpose blockchains can't easily replicate. The XPL token has strong value accrual mechanisms. With a fixed supply of 10 billion tokens and only 1.8 billion currently circulating, supply dynamics favor price appreciation as adoption grows. The token is used for transaction fees, staking rewards, governance, and ecosystem incentives. What are the potential profits? Based on comparable blockchain infrastructure projects and the size of the stablecoin market opportunity, Plasma presents significant upside potential from its current $1.33 price. Conservative scenario: $3 to $5 per token, 2 to 4x returns based on current TVL and trading metrics maintaining momentum. Moderate scenario: $8 to $12 per token, 6 to 9x returns, assuming continued ecosystem growth and broader stablecoin adoption. Optimistic scenario: $15 to $25 per token, 11 to 19x returns if Plasma becomes the dominant stablecoin infrastructure platform. Using a moderate 6x target, bringing XPL to $8 per token as our baseline calculation, this represents substantial upside from current levels. Using the crypto profit calculator, this means you could make around $2,300 in profit from just a $500 investment if the project were to hit the $8 price target we set. Number 3, Avantis. Currently priced at $1.54, with a market cap of $395 million and a fully diluted valuation of $1.5 billion. What is Avantis? Avantis is revolutionizing decentralized finance by creating the world's first universal leverage layer for global assets. Built on Coinbase's base blockchain, Avantis isn't just another crypto exchange. It's a game-changing platform that lets you trade everything from Bitcoin and Ethereum to gold, Forex, and commodities, all with insane leverage up to 500 times. Think of it this way. Instead of needing separate platforms to trade crypto on one exchange, gold on another, and Forex somewhere else, Avantis brings everything under one roof. You can go long on Bitcoin while simultaneously shorting gold, all while keeping full custody of your funds. What makes Avantis truly special are its revolutionary features that you won't find anywhere else. They offer loss protection rebates, meaning if you lose money trading against the crowd, you can get up to 20% of those losses back. They also provide positive slippage, which means you sometimes get better prices than what you originally ordered. The platform has already proven itself by becoming the largest derivatives exchange on Base, generating over $15 million in annual fees and helping liquidity providers earn more than $1 million in USDC rewards. Why invest in Avantis? The AVNT token is the powerhouse behind this entire ecosystem, and there are several compelling reasons why it could be a smart investment. First, you're getting in early on a first mover in the RWA space. Real-world assets are the next big thing in crypto, and Avantis pioneered trading them on-chain, while everyone else is still figuring out how to do this. Avantis is already generating millions in fees from it. Second, the tokenomics are designed for growth. AVNT has a fixed supply of 1 billion tokens, which means no inflation eating away at your investment. The token serves multiple purposes. It's used for governance, letting you vote on which new assets get listed and how fees are structured. You can stake it to earn a share of those $15 million in annual protocol fees. Plus, holding AVNT gives you up to 50% discounts on trading fees. Third, the technology advantage is massive. Most competitors offer 10 to 100 times leverage. Avantis offers 500 times. Most focus only on crypto. Avantis trades everything. Most require you to deposit your funds. Avantis lets you keep custody. The financial performance speaks for itself. The platform is already profitable, already generating substantial fees, and already rewarding token holders. This isn't some moonshot project with no revenue. It's a working business that's growing fast. Major exchanges have taken notice too. Binance, Bybit, Kraken, and other top-tier platforms all list AVNT, showing institutional confidence in the project. What are the potential profits? The profit potential for AVNT is substantial, driven by several growth catalysts and the token's multiple value accrual mechanisms. Currently, AVNT is in its early stages with massive room for growth. The global derivatives market is worth trillions of dollars annually, while DeFi derivatives are still tiny compared to traditional spot trading. As more traders discover the benefits of trading RWAS on-chain, Avantis is positioned to capture a significant share of this migration. The token benefits from multiple revenue streams. As trading volume increases, protocol fees increase, which directly benefits AVNT stakers. As more assets get added to the platform, more traders join, creating a positive feedback loop. The governance aspect also becomes more valuable as the protocol grows and controls more assets under management. Conservative price targets suggest AVNT could reach 5 times to 10 times its current value as the RWA narrative gains momentum and the base ecosystem continues growing. More aggressive projections, considering the total addressable market and first-mover advantages, suggest even higher multiples are possible. The key catalysts ahead include the completion of their community airdrop, additional exchange listings, new asset integrations, and broader adoption of their SDK by other protocols building on Base. Using the crypto profit calculator, this means you could make around $2,000 to $4,500 in profit from just a $500 investment, if the project were to hit conservative price targets of 5 to 10 times growth. Number 4, STBL. Currently priced at 42 cents with a market cap of $222 million. What is STBL? STBL is about to change everything you thought you knew about stablecoins. For years, when you've held USDC or USTD, your money has been sitting there earning you absolutely nothing, while companies like Circle rake in billions. literally over $4 billion in 2023 alone, from your deposits. STBL flips this broken system on its head. It's a revolutionary protocol that lets you earn real yield on your stablecoins without giving up the stability and liquidity you need for everyday transactions. Here's how it works. STBL uses a brilliant 3-token system that separates your money from your earnings. When you deposit high-quality real-world assets like US Treasury bills into the protocol, you get 2 things back. First, you receive USST, a dollar-pegged stablecoin that works just like USDC or USTD. You can spend it, trade it, or use it however you want. The difference is that while you're holding it, your original deposit is working for you in the background. Second, you get a special NFT called YLD that represents your claim to all the yield your deposit generates. Think of it like owning a dividend-paying stock, except it's backed by the same treasury bills that big banks use to stay profitable. The genius part is that this isn't backed by risky crypto assets that can crash overnight. We're talking about regulated, institutional-grade instruments like US Treasury bills, and money market funds, the gold standard of safe investments that have been around for decades. You maintain complete control over your assets with no lockup periods, no staking requirements, and you can redeem your original deposit anytime by simply burning your USST tokens. It's like having a high-yield savings account that lets you spend the principal whenever you want. The team behind this isn't some random DeFi experiment either. We're talking about co-founders from Tether, who have already proven they know how to scale stablecoin infrastructure to serve millions of users worldwide. Why invest in STBL? The investment opportunity here is absolutely massive, and you're getting in at the perfect time to ride what could be the next major wave in digital finance. First, let's talk about market timing. The stablecoin market is worth over $150 billion and growing fast. But here's the crazy part. Almost none of that money earns yield for the people actually holding it. Meanwhile, the companies issuing these stablecoins are making billions in profit. STBL is the first protocol to give that yield back to users. And once people discover they can earn money on their stablecoins without any extra risk, the migration will be unstoppable. The technology advantage is huge. Traditional DeFi yield farming requires you to lock up tokens, take on smart contract risks, or navigate complex protocols. STBL's yield-splitting mechanism means you earn passive income while keeping full liquidity. It's like having your cake and eating it too, something that's never been possible before in crypto. What makes this even better is the backing. While other stablecoins can collapse when crypto markets crash, STBL uses the same treasury bills and money market funds that traditional banks rely on. These assets have generated steady returns for decades regardless of what's happening in crypto markets. The team credentials are incredible. These are the same people who built Tether into the world's largest stablecoin. They understand both the regulatory requirements and the technical challenges of scaling financial infrastructure to serve millions of users. For STBL token holders, you're getting multiple ways to profit. You earn fees from every USST minting and redemption. As more people discover yield-bearing stablecoins, the protocol captures more assets under management, generating more fees. You also get governance rights over the entire ecosystem as it grows. The timing couldn't be better either. STBL is already listed on major exchanges like Kraken and Bitget, showing institutional confidence, but the full protocol with USST stablecoin launches in late 2025. You're getting in before mainstream adoption, while the infrastructure is already being built. Unlike experimental DeFi protocols that could fail overnight, STBL was designed from day one to meet regulatory requirements. As governments crack down on crypto, compliant projects like STBL will thrive while others struggle to adapt. What are the potential profits? The profit potential for STBL is extraordinary because you're investing in what could become the new standard for how stablecoins work. Right now, the stablecoin market is worth over $150 billion, but the yield-bearing segment is practically empty. As more people realize they can earn money on their stablecoins without giving up stability or liquidity, we could see massive migration from traditional stablecoins to protocols like STBL. The revenue model is beautiful in its simplicity. Every time someone mints USST stablecoins, the protocol collects fees. Every redemption generates fees. As the protocol grows and manages more assets, those fees compound. Conservative projections suggest STBL could manage $1 to $5 billion in assets within just a few years of full launch. Looking at comparable projects gives us a sense of the potential. MakerDAO, which issues the DAI stablecoin, has a market cap of over $1 billion while managing about $5 billion in collateral. But STBL's model is superior because it offers yield to users, making it naturally more attractive than traditional stablecoins. The key catalysts ahead are massive. The USST stablecoin launch in late 2025 will drive immediate adoption and fee generation. As institutions discover they can offer yield-bearing dollar exposure to clients, adoption could accelerate rapidly. Regulatory clarity benefits compliant protocols like STBL, and cross-chain expansion multiplies the addressable market. Using the crypto profit calculator, this means you could make around $2,000 to $6,500 in profit from just a $500 investment if the project were to hit conservative price targets of 5 to 14 times growth, as the protocol captures market share in the emerging yield-bearing stablecoin space. Now, before I show you the next coin, please drop a like on the video for all of this free value, and be sure to subscribe with notifications on to not miss out on another video. Next up, Reservoir, currently priced at 7 cents, with a market cap of $15 million. What is Reservoir? Reservoir is best described as a permissionless, decentralized stablecoin protocol, originally built on Ethereum, and now deploying on multiple blockchains, including BNB Smart Chain, and upcoming integrations with Solana and Avalanche. Its core product is the RUSD stablecoin, which is minted via depositing approved collateral, including on-chain assets and tokenized real-world assets such as treasury bills. Reservoir aims to reduce liquidity fragmentation in DeFi by enabling easy cross-chain movement of RUSD and related assets. The protocol offers. The RUSD stablecoin is pegged to the US dollar through a combination of over-collateralization, algorithmic stabilization, and a peg stability module for liquidity. Yield-bearing tokens like SRUSD, which has a floating yield, and TRUSD, which has a fixed-term, on-chain term deposits, each serving different yield and risk profiles. DAM token, which empowers holders with governance rights and is used as an incentive for protocol participation, including staking and liquidity provisioning. Advanced risk management, including real-time proof of reserves and multiple independent audits for security and transparency. Why invest in Reservoir? Reservoir has several features that may appeal to investors looking for DeFi and digital asset yield opportunities. Exposure to a cross-chain, collateralized stablecoin ecosystem with multiple revenue streams from protocol operations. DAM token allows participation in decentralized governance and protocol upgrades, such as decisions on collateral, risk parameters, and protocol fees. The protocol is secured by 4 separate audits covering its core code and key integrations, and it publishes real-time balance sheets for transparency. The ecosystem is designed for resilience. Risk controls such as collateral checks and automatic peg support mechanisms are built in, reducing systemic DeFi risks. What are the potential profits? Reservoir has a very low market cap compared to other DeFi projects, and especially compared to other lending protocols. It wouldn't be unlikely to see DAM token hit a market cap of over $100 to even $300 million. For this video, I will just use the high-end target, giving us a dollar value of $1.40, but I always recommend taking out your initial investment after a coin has gone up 2x, and also just taking profits when it suits your life. Remember and realize gains, and not just sit in unrealized gains. Using the crypto profit calculator, this means you could make around $9,500 in profit from just a $500 investment if the project were to hit the $1.40 price target we set. Now, I recently posted a video where I talk about which direction the market will go over the next few weeks and months. The predictions I made in the video have been accurate so far. I highly recommend checking it out and watching until the end to get the full picture of where the market will go over the next few weeks and months.